Let me introduce myself. I am CA Pravesh Agi. I completed my CA in 1985 and I am working as a visiting faculty with the Institute of Chartered Accountants of India. So let's do question number 1. Mr. Raman is a co-owner of a house property along with his brother holding equal share in the property. Now there is certain information which has been given with respect to the house property. Municipal value of the property is rupees 1,60,000. Fair rent is rupees 1,50,000. Now let us solve this question. First we'll calculate or compute the gross annual value. Now we know that the rule is that the gross annual value is higher of the expected rent and actual rent received. Now expected rent is higher of municipal value and fair rent but restricted to the standard rent. So let's start with it. Municipal value of the property is 1,60,000 and the fair rent is 1,50,000. So higher of A and B, which is the municipal value of the property or fair rent. So higher here is municipal value of the property, which is 1,60,000. Now the standard rent which has been given in the question is 1,70,000. So the expected rent then would be the lower of C and D. D is standard rent. So lower of C, which is 1,60,000, and D, which is the standard rent, is 1,70,000. So that means expected rent would be 1,60,000. Now the actual rent in the question, it is given that it is 15,000 per month. So for the whole year the actual rent will be 1,80,000. So the gross annual value will be higher of the expected rent or the actual rent. So here the actual rent is higher than the expected rent. So the gross annual value will be 1,80,000. So let us compute the income from house property of Shri Raman for the assessment year 2018-19. Now we have calculated earlier the gross annual value, which is 1,80,000. Now the municipal taxes, since it has been paid by the tenant, it will be not allowed as deduction. So the net annual value will remain as 1,80,000. Now he will be allowed deductions under section 24. 30% of the net annual value will be 54,000. Then he will be allowed interest on housing loan. Now the interest charged by the bank is rupees 25,000, out of which 21,000 has been paid. But he will be allowed entire reduction of 25,000 because interest on housing loan is allowable as deduction under section 24 on accrual basis. Interest on fresh loan taken to repay the old loan is also allowable as deduction. So the entire 5,000 rupees will also be allowed as deduction. So all the deductions put together will be 84,000. So the income from house property will be 1,80,000 minus 84,000. So that will be 96,000. So income from house property will be rupees 96,000. Since 50% of the house is owned by Raman, so 50% share will be taxable in the hands of Shri Raman. So that will come to 48,000.